Good morning. It is Monday, the 7th of November, 2022. Nearly 10 a.m. in New York time. So the index opened half an hour ago. We had no news this morning. So I tend to, on Mondays, let the market open up, let some volatility come to the market after the weekend before looking at any trading opportunities. And yeah, so we can see there's no news Monday. Tuesday, we've got congressional elections all day. There's no specific moment when that's occurring. Wednesday, no news. And then on Thursday, we've got a CPI release at 8:30 a.m. So that's a major release for this week. And then some news on Friday as well. But pretty quiet week on the news front. So looking at the daily chart, we're still sitting around that 33,500 resistance target. The thing for me right now is it still looks bullish. Okay. If we look at it in comparison to these other peaks, we had the closest one that's resembling at the moment is this one here, where we could have a bit of a channeling for a little bit, and then another push to the upside. We haven't had a extremely strong sell-off to the downside as we have had here in the middle of August. Once it reached the peak, it sold off very hard and quickly, and I was looking to see this kind of action, which still could happen today. If we get a nice big daily candle like this today, then I'm pretty bearish. But right now, it's holding this kind of bullish daily pullback. It could also channel out for a bit and then shoot up again and collapse, or drip down for the next few days and then collapse. But nothing dramatic at the moment to the downside. It's still holding this upside pattern. Okay, so we can put in a daily channel now that looks like this. Okay, and until that is broken, for now, this is kind of the upward channel we're looking at the moment. So it's still bullish on the daily for me. Okay. That being so, just to reiterate, let's just go to the 4 hour quickly. We need this kind of action for it to become bearish, where it needs to fall, continue maybe drip feeding around here through a range between 3,200 and 3,500, and then falling to the downside thereafter. If it holds this channel here and shoots the upside, we could see 33,500 supply, that major supply zone here, broken, and some upside movement. So that's the highest time frame analysis there, daily and 4 hour. I look at both in the same context regarding the larger bear trend. That's the main channel I'm looking at here, is this larger bear trend. Now on the 1 hour, we see here on the 1 hour uptrend, we did have a break of structure. It's held outside of that. The break of structure was here as it fell out of this channel. Okay, 1, 2, fell out of there, and now it's sort of holding on the 3,200 1 hour demand and underneath that channel at the moment. So on the 1 hour, it looks a bit more bearish than it does on the daily. And again, we could see what I would see as a pattern that that I'm familiar with would be another push up here to supply liquidity at around 3,300, a major key target level where it bounced off at FOMC, and then so it's kind of like a double topping, and then a bear trend continuation. But right now, this uptrend isn't strong by any means. It kind of looks rangy, and we could see some nice mean reversion for the week as we don't have any major news coming out. It's quite quiet this week for news. So these are our demand floors. That would still be a supply level, and just here to put in the 3,300 level. there, 3,300 1 hour supply. That is there, and yeah, it could work in this area here. This is the area we're looking at the moment between 3,300 and 3,200. For it to be confirmed for me as bullish, I need to see it break below 3,200. You know, and when it does break that, it's more than likely going to continue forward to 3,100. So any break of 3,200 floor for me is bearish, a confirmation of bearishness. However, if we hold above here and continue climbing to the upside, we may get another attempt at 33,500 here to the upside. So no man's land right now, and perfect for some mean reversion. If we go to our 1 minute trade planning river, we can see here not much action at the open, the index open. Already I see pretty good trade at the bottom of the river there. You know, it might not even make it today, but it kind of looks like it's strip feeding down there. Here's obviously the next demand zone beneath the river. I don't see a lot of power at the moment though, because of this movement. How it's mean reverting. You know, it's back to the mean, back to the mean, back to the mean. Again, it is the median. So if it starts dripping hard from here, it's probably going to go to this level. Okay, and that's taking our measurement of the river. I kind of like to use that as a measure of how far something will go, and you can see it sort of measures up here with this demand zone. So even though it doesn't look like it's going there right now with the momentum and everything, that's the highest probability area. But you know, there is scalping opportunity here at this zone. Through here we can see there's lots of orders that were held through the Asian session. This is the area where there's orders at the moment through here, and obviously that lines up the riverbank. It's as simple as that. So that's kind of where I'm looking at for sell orders, for buy orders, and then selling orders with our highest level of supply there at the moment. Okay, right there, that coincides with Friday's NFP high, which, you know, there's quite a lot of price action on Friday. And you can see the difference between today, between Friday and today. You know, it's really, there's not much going on at the moment. But would there be a sell here? Yeah, probably, but it goes against our rules of the riverbank. So personally, for me, I want to stay strict to that, because, again, riverbanks give us the highest probability of a turnaround because it's the average area of the volatility extension. So the further away the elastic band is from the median, the more chance it has of flicking back to the middle. So right now, the highest probability trade we've got a filling looks like this buy here. Okay. Take that as stop loss, drag it right out there if you're in the 100k account, and -4.5 if you're on the 200k account, drag it out to 8.5, and then, you know, a little take profit there. Drag it out a little bit. I like to go to the next region of supply, which is here, this kind of zone, but you could get a nice little trade like that out of that price action today. Putting one here, you know, it goes against the rules, because rules are everything we have. They're all we have with this game. So yeah, it could go there, but, you know, is it going to make it? Maybe. Is it going to keep going through? Probably. So if we look to our left, where's our level of supply to the left? It's kind of like 33,700. Sorry about that. So 33,700 is, if we go across here, we've already got it in. We can drag that out, and that of course lines up with our upper band there ish. So I'm pretty confident putting a trade in this area here, especially today. If it doesn't fill, it doesn't fill. It's Monday. We don't need to expect much, but that's sticking to the rules. Again, the account will work itself out if we stick to the rules, because the days that do yield, Like, even this was a news day, I came in and I saw some good opportunities there. Here I did take a trade at the end of day beneath the river band there. That's because I just saw such a strong level of supply here. Use your discretion. But for now, on Monday, just, as volatility comes into the market, I am going to be safe and just set one just up here above this area of supply in between here. I don't see any crazy moves happening today. So yeah, that's really the high probability trade zones for me that I'm looking at. Pretty straightforward, simple stuff, to be honest. And yeah, buy limit there around 32,350 zone, and a sell limit there at 32,650, that kind of area. Okay, now just later in the day, if this does continue just putting in this small movement, be wary of trying to chase that and going here, because the second you do, it can just drop out after lunch. Be wary of lunchtime. That's when we get some volatility into the market, when the traders come back to the desk. That's how it used to work anyway. I've been caught out. I got caught out a couple of weeks ago, like coming to the supply zone that was to the demand zone that was closer to the median, and then having it work against me immediately and having to wait patiently for it to nearly hit my stop loss and come back. So it just isn't worth going through that stress and putting yourself into that position. And being patient and not getting any fish sometimes is the better trade. Okay, so that's where I'm waiting for today's zone. I'm going to put alerts in here, adding an alert just beneath this area of demand here, far out the money, because if it does drop in here, I don't want to be alerted as soon as the trade's open and negative. If it gets down to here, I'll wait for it. Then I'll go into emergency protocol and go into recovery mode and how to get out of a negative trade. But I don't want to know if it's a negative in this area, like it'll close itself. Likewise, up here to the top, around 32,800 is my alert zone, so well above my river, and something that would let me know that something's amiss in the volatility, something's happened. There's no news today, there's no reason for it to go up there, so it's just worst case scenario. And again, later in the day after lunch, if the price action is very bunched up in the middle here, you can look at trading maybe this supply region here, but for now, just keep it at the riverbank to be not even safe, but just disciplined in the strategy and stick to the rules, because we know it pays off in the end. Anyway, guys, that's beautiful. Happy Monday. Looking forward to a nice chilled week on the markets. We traded really well last week. Remember, no rushing, keep it calm, stick to the process, and it'll pay off in the end. So cheers.